Disclaimer, please keep in mind, I am not a licensed financial advisor, nor do I give out financial advice. The user of the videos, products, or services assumes full risk and responsibility for their trading activity. NFA requires disclaimer. Forex currency trading has large potential rewards, but also large potential risk. All right. If you're here, you're interested in learning Forex. Are you interested in trading Forex? Well, what is Forex? Forex is the foreign exchange market, better known as Forex. It is the process of changing one currency into another currency for a variety of reasons, usually for commerce, trading, or tourism. Forex is trading stage that can be done with various brokers like Oanda, Hugo's Way, and many more. Different ways this is done. Due to the consistent travel and exchange of currencies between countries, it creates a market that individuals can invest any amount of money in hopes of making money based on the value of currency going up and down. The exchange rate. The exchange rate, which one currency will be exchanged for another. Forex is based on how much and how often a pair exchanging currencies between one another. For example, if you live in America and you go to Great Britain, you must exchange your US dollar to the Great British pound. Contrary to what most people would think, currencies do not equal dollar for dollar. The rate is based on the exchange rate due to the deciding value of the exchanged currency. If there is a lot of currency, it will be worth little. If there's little, it will be worth a lot. Everything is done in pairs. When trading Forex, you always trade in pairs of currencies. Although you may open an account with the US dollar, you can always trade another currency like GBP, AUD, and so on. The system is set up to convert your current currency to the main currency pair. In this case would be GBP, and now you're trading GBP currency in exchange with the AUD, the Aussie dollar. You can also trade different types of energies, metals, and cryptocurrencies. There's other things that's available for trading as well. It depends on what platform or what you use to trade. If you're going to use certain MT4s, it works, certain ones don't. Okay, keep in mind, economic influxes can affect the exchange rate as well because the currency also is affected by one's economy standings and daily news. Trading Forex is very similar to trading stocks in many ways, but is also different in others. When can you trade? All right, when can you trade Forex? Trading Forex is available 24 hours, 5 days a week, Sunday through Friday. Including most US holidays, not all holidays, but some holidays you can trade on. Different time zones. Due to the different time zones, you have various market sessions. Although you can trade 24 hours a day, in order to make money, you want to trade each pair during the market session. So in other words, when that market session is open or when it's going to be the most validity or vitality, as they say, where you're going to have the most action and liquidity. I'm sorry, that's the word I'm looking for. That's when you want the most liquid, and you'll get the most liquid is during the market time is open. Simple example, you don't want to trade the Aussie pairs when it's midnight or after hours there. The key thing is to trade when the banks are open in those locations to see good action. The major trading sessions, you have 4 major trading sessions: Sydney, Tokyo, London, and New York. With London being the largest trading session in the world when the liquidity and the volume are at its all-time high. 34% of all Forex transactions are during the London session. A tip, best trading time is during when session overlaps. When 2 sessions are open at the same time, which means high liquidity and high volume. For example, London, New York. Those are really, really good times to trade. All right, trading style. What kind of trader are you? There's various types of traders. Some people have a combination of all. Some people like to choose one trading style. It's really based on you. So the various trading styles are day trader, swing trader, and scalper. Those are the most common. You can combine more than one style of trading, but it's safer to practice one style. Once you practice and learn that one style, then you can master the rest. Learning all styles will not only make you a better trader, but it will help you decide what kind of trader you would like to be. A tip: the key to trading styles is to find one that suits your personality and your whole mindset really matters when trading. So psychology and all that, you want to go with what works with your psychology, your personality, and your mindset. All right, movements on the chart. We have two different types of movements. You have your bullish movement. Bullish movement is meaning when the market is going up. This is usually shown with a greenish blue candlestick. Although a greenish blue candlestick appears, it doesn't mean reversal. It can also mean resistance in the market. So you may see that blue candlestick coming, but it may also be resisting a pivot point, another support and resistance area from past price action. So those are things you learn with learning to read charts, and you have to learn your top-down analysis and how to look back and look backwards on your time frame to see what has happened, and it almost helps you and guides you to what's going to happen. So the other movement on the charts will be your bearish movement. A bearish movement is when the market is going down. This is usually shown with red candlesticks. There are tons of different candlesticks you will encounter, which will also direct you on the next move that will take place. A great book to read is the Candlestick Trading Bible. It will cover most seen candlestick formations. So if anybody wants that, please just message me. I do have that on PDF. I don't mind sharing that if you want that PDF. So ways and how is it measured? How are we measuring this market? Like how are moves measured? Like what is this these numbers we're seeing, right? It's called usually called pips. Pips are points in percentage. Pips are the unit of measurement in the forex market, and that's how it is measured. How it is calculated: when counting your pips, the currency pair determines what decimal place determines what. The only currency pair you really have a difference of place is with the JPY pairs. So with the JPY pairs, they're going to be slightly different. It's not going to have your decimal point here, and then you're going to have 1, 2, 3, 4 spaces to really get your first number. I believe it's 2 spaces with the JPY, but I'll have to do a little bit more research on that. I don't really mess with that one too tough. I am more of a GBP, AUD, EUR trader. So with that being said, the right here before the decimal point is going to be your 10,000s pips. Then you got your 1,000 pip right after the decimal point, 500 pips after that, 30 pips after that, 8 pips after that, and zero point 0.2 pips. So you got your pretty much your ones place, your tens place, hundreds, thousands, and 10,000s. That's pretty much how that's broken down. But I will break that down further in a different class and how to measure pips, how to calculate your pips and see how many pips you're risking, because you need to know your risk to reward. That is a must when trading because it can make or break your account. All right, upcoming videos. We have counting pips. I will teach you how to do that. I'll explain further breakdown in counting pips as well as risk to reward ratios when counting them when you trade. The exchange rates, we're going to learn a little bit more about the exchange rates, how often they change and why do they change, what affects them. We're going to go over candlestick patterns. What are some common candlesticks that are seen when they and what they mean in the market. We're going to go over the different trading sessions. The 4 trading sessions, learning to know your time zone and the reference to each session will help you further your success. And it's going to be much more videos to come after that. If you do like or want to know any more information, please message me, comment, whatever you may need, and we will go there and I will further discuss things. So again, that is it for the intro. If you have any questions, again, don't hesitate to contact me or reach out, and we will get whatever questions you have answered and get you trading.